Hi everyone, welcome to my channel on Canadian dividend investment. In this channel, I talk about Canadian stocks, well-symbol portfolios, and in overall what's happening in the stock market. In today's video, I'll be talking about Suncor Energy and how the stock is performing. Suncor is an energy and oil company headquartered in Calgary, Alberta. Suncor have global team of over 30,000 people. Their operations include oil sands development. Suncor was the first company to commercially develop the oil sands in northern Alberta. Currently, Suncor extract and process the oil sands into synthetic crude oil. Exploration and production. This is responsible for upstream oil and gas activities that will provide portfolio diversity to support the company growth. They have conventional oil and gas production on the east side of Canada and in countries like UK, Norway, Syria and Libya. Since conventional oil production is much cheaper, it helps balance against higher cost of oil sands production. Refining. Suncor processes oil sands crude into high quality refined products that is used by the consumers. Suncor operates refineries in Alberta, Ontario and Quebec in Canada and in Colorado in USA. Low carbon power. Suncor has been in the wind power business for more than 20 years. The generating capacity of wind facilities is around 111 megawatts. That's enough to power almost 53,000 homes. Suncor is also looking into more renewable liquid fuels. Suncor operates Canada's largest ethanol plant. They also have other renewable fuel initiatives like collaborating with Enercom, a waste to renewable fuels and chemical technology developer, for carbon recycling facility to convert non-recyclable residual materials as well as wood waste into renewable fuels and renewable chemicals. Suncor is the largest producer and consumer of hydrogen in Canada and are working towards to be a global leader in the production of clean hydrogen. In June 2021, Suncor announced a first-of-its-kind project, Alberta Zero Emission Truck Electrification Collaboration, to design, manufacture, and test long-range hydrogen fuel cell trucks to operate year-round between Calgary and Edmonton. Supply and trading. Along with production, they also does sales and marketing of crude oil, natural gas, sulfur, and petroleum coke to mid and large size companies. Petro-Canada. Petro-Canada, owned by Suncor, has a network of more than 1,800 retail and wholesale locations across Canada. Petro-Canada now include electric highway network of fast charging EV stations. We have recently seen that the energy sector continued to outperform the markets. That is understandable based on the oil and gas market right now, but as an investor, the question is always, will this growth sustain? There are a lot of challenges for fossil fuels based companies. More enforcement, more taxes, more restrictions that will prevent them to expand. And then there is a generation of people moving towards renewable energies. So at one point of time, there may be a scenario where there will be no demand for oil. But the question is, what is that timeline? And you can get different answers based on whom you ask this question. Personally, I don't see oil going out of demand in the next 10 years. It is volatile for sure, but it will take time to phase them out of our lives. As an investor, oil and gas stocks can produce significant capital gains from share price appreciation and also does provide attractive dividend income. Now, where does Canada stand on this whole matter of fossil fuels and carbon emissions? In 2019, the federal government of Canada announced that it would impose carbon tax in provinces and territories with no adequate emission pricing plans of their own to reduce the greenhouse gas emissions. It started with $20 per ton in 2019 and increased $10 every year. With a healthy environment and a healthy economy initiative, the price increase would be $15 per year from 2023. That means by 2030, the carbon tax would be $170 per ton. However, on Monday at the COP26 summit in Glasgow, Prime Minister Justin Trudeau said that Canada will cap oil and gas sector emissions today and ensure they will decrease tomorrow at a pace and scale needed to reach net zero by 2050. In mid-December 2020, the federal government released their updated strategy to reduce greenhouse gas emissions by 2030. The plan, A Healthy Environment and a Healthy Economy, aims to reduce carbon emission by 32%. Prime Minister only talked about putting a cap on emissions and has not mentioned anything about reducing oil and gas production. And as a politician, it will be very difficult for him to say that, as natural gas and oil are Canada's largest export products. Also, by law, he cannot say that, as natural resources fall under provincial jurisdiction. This is a sign that, irrespective of adding more enforcement, the oil will be here for a while. The prices of oil and gas are a major factor in the valuation of oil and gas stocks. When prices are low, the market tends to punish these stocks. If we compare the last 5-year chart of Suncor with the last 5-year chart of oil prices, we can clearly see the relation. When Saudi Arabia and Russia began an oil price war in March 2020, the global oil prices fell by 34%. The prices were already down due to drop in demand. This led to a collapse of stock prices in the oil and gas sector. But now in 2021, the prices have started going up. In fact, since the beginning of the year, oil is up 63.5%, reaching a 7-year high. Demand has been rising in recent months as economies around the world have started to reopen. Analysts believe that oil prices will continue to rise amid surging demands and tight supplies. As per the news from CTV, in some parts of Canada, the oil prices would even go up to $2 per liter within the next 13 months. So, timing plays a crucial role for oil and gas investments. That's evident from the industry's performance in 2021. Crude oil prices were red hot during the first half of the year as WTI rallied more than 50% from January through June. That helped fuel an equally impressive rebound in oil stocks, many of which also rallied more than 50% in the first half of 2021. The main sector driving that rebound was the reopening of the global economy as the COVID-19 pandemic waned, prompting more demand for oil. Now let's have a look at the chart of Suncor in detail. This is the chart for the last 5 years, and this line here shows the resistance line before the pandemic. And as for every stock, the early months of 2020 we had the downfall because of pandemic. And as we have already gone through, the prices of the oil also impacted the growth of the stock. And it's still below the pre-pandemic prices. The red line here is the lowest price for the year 2021. I don't think we will be going to this level in near future. And as you see, the last couple of months it's going up. The last 2 quarterly results were very promising. Suncor published their Q3 results last week. Now let's have a look at the highlights of last quarter. Suncor reported that its operating earnings increased to $1.04 billion or 71 cents per common share in the third quarter, compared with an operating loss of $338 million or 22 cents per common shares in the same period last year. Also, it earned a net profit of $877 million in its third quarter or 59 cents per common share, compared with a net loss of $12 million or 1 cent per share in the third quarter of 2020. Funds from operations were $2.641 billion or $1.79 per common share in the third quarter of 2021, compared to $1.166 billion, that is 76 cents per common share in the third quarter of 2020. Suncor's total upstream production for the quarter ended September 30 was 698,600 barrels of oil equivalent per day, compared with 616,200 in the same quarter for a year ago. The company's net synthetic crude oil production was 405,500 barrels per day in the third quarter of 2021, compared to 410,800 barrels per day in the prior year quarter. Sync crude upgrader utilization was 91% in the third quarter of 2021, compared to 78% in the prior year quarter. Suncor's refinery business reported $947 million in funds from operation in the third quarter, compared with $594 million in the same quarter the year before. There are more such numbers here which shows that the company is going in a right direction. This is from the document from Suncor's website. I will share the link in the description so that you can go through it in detail. Another important point that I want to highlight here is that the company said it reduced its net debt by $2 billion in the third quarter and has reduced its net debt by a total of $3.1 billion since the beginning of 2021. They also have a plan to reduce net debt by a total of $5 billion by the end of the year. Oil companies are known for its high dividend yield, and Suncor did something spectacular on Thursday. They increased their dividend from 21 cents to 42 cents per share. That is, they doubled their dividends. This will be paid on December 24th of this year. Suncor's board has also increased its current share buyback program to 7% of outstanding shares to be purchased by February 7th. Suncor CEO Mark Little said that even with a significant increase to the dividend and continuation of the buyback program, we are planning to accelerate the pace of achieving the net debt targets. So this increase in dividend is not going to impact the growth that they have anticipated. Now let's have a quick look at what is Tip Ranks here to say. They have a smart score of 10, which is the maximum score, where the analysts, news and bloggers are bullish and have a strong buy recommendation. Technicals and trends are on the positive side. So based on all this, I believe sun is going to shine brightly on Suncor. What are your thoughts? And let me know whether you have Suncor in your portfolio or watch list.